What is up, everyone? This is going to be the first of the trade breakdown videos I'm going to be dropping for the mentorship students. This is going to just kind of be helping you to understand the concepts and understanding my approach to the market in order to help you work through any like any issues that you have in the markets, like things that you aren't technically like really picking up from the videos, any issues you have. So this morning, I took this short on gold. And we're just going to kind of go over how I got to this point, got this idea. So the first part of my process is always going to start with top down. I'm always going to start in the highest time frame. So let's just go ahead and clear this off right here. So this is gold, which has been my main market for a while now. I've spent a lot of time researching gold, looking at how price prints on it, how gold differs from other markets, and starting top down, left to right. I immediately started from this low to this high, noticing all of this data in here. I didn't really need to use any sub-ranges. Kind of peeked at this, instantly noticed, okay, low, high, this high printed here, mark that up there, then pulled back here, putting in this low to then trade up into here, noticing these wicks here as potential absorption and failure to break through to the top side. Now, after that happened, I already noticed that we had left open this low, boom, boom, boom. From that point, I came into the lower time frame, 3-month chart here. Notice each of these candles here is a 3-month period. So it's a whole quarter between every single candle. So after this absorption here, that's already like one red flag to me that, okay, this here could start to move to the downside. Then I noticed this wick here of these inside ranges. Boom. That also was a failure to break on the second test. So we can go ahead and mark that up right there. Then this second push here, the second drive, essentially, I noticed that these were the lows of the inside range. Mark that up there. Then low to this high, again, failing to break. Another kind of red flag to me that this thing could top out. And this was months ago that I noticed this. Initially, I was actually looking for this to break up to the top side on this move up, but that never came. And then once we started to break out to the downside in here, that's whenever I kind of called the top on gold and said that I was, okay, we're most likely not going to break through up like I expected we would. Now, at this point, I was already down to the weekly time frame, not really paying too much attention to any of this inside data or outside data anymore because I've already refined it. I know my two areas I need to focus on. This here is a failure to break, resulting in this drive to the downside. These were the lows in here that caused this high. Noticing that if we wanted to kind of bottom out, I was looking for that to be within here somewhere, get some kind of big accumulation over longer time frame and then drive up to the top side. Obviously that did not happen. So I was already seeing this move down, noticing this pullback up in right here, and then this pullback in right here. Noticing that this pullback was just a redistribution into the supply, this high liquidity area, whatever you want to call it, pivot, then breaking down to the downside here, giving us another drive and then a distribution. So we will go ahead and mark these up real quick just to build that image in your brain. Boom. Now at this point, after we got down in here, I was already noticing this morning that last week we had actually broken down under this low. So I was just using this high and the sub ranges within here to kind of gauge where I was at within that price. Noticing that on the higher time frames, if this low was taken out, which it actually was last week, then it's likely for us to hold this high, potentially get a deep retracement like this, more shallow retracement like this one, or just a redistribution in here and then a drive down to the downside. Now last week, gold had closed, come on down to the 1 hour, and today is the 26th. Yesterday was Sunday, today is Monday. The market opened on the 25th, and then we closed last week on the 23rd right here. So I was already noticing, okay, this inside range of this drive down had kind of been broken here. Boom, printed in this new inside range, giving us this nice redistribution, which we actually traded last week and had signals sent out for this move down. Boom. Now just taking that same exact concept on the inside fractal, inside range, inside lower time frame, whatever you want to call it, it is all the same. Do not focus on the terms, focus on the concepts. I'm going to say that in pretty much every video. Just understand that and listen, because I've spent a lot of time trying to find that holy grail and it does not exist. I promise you. So here we had these lows in here. Boom, that range. Now notice this here was that outside range that I was using, and then I was following the sub ranges of that down after this move down here. Here, then here, and then this morning I opened up the charts and I noticed, okay, we have broken down to the downside. We're under this major level where I was worried about, and now I knew that if that level was to go, because that was our higher time frame based area, that gold would likely just magnet down to the downside. And now I'm focused on 1600 as my next target, and then potentially 1500, 1550-ish, and I'll just continue to follow this down until the price wants to show me otherwise. So this morning, now one thing I'd use is the session highs and lows for my system, because I'm trading kind of lower time frames, but not super low time frames like a lot of people do using these concepts. I use kind of an intraday / intra-week type of system right now, and I'm loving it, especially on gold, because gold, these bigger moves are typically going to print once or twice a week, and that's really all that you need. So here I'm going to throw this indicator on. I actually spent like $100 on this indicator for some other trader. Now, as we break down to the downside, this is a great indicator, by the way. I highly recommend it. Another one, if you want to trade similar time frames as me, is called Session Break right here by IcoStan. Now, it'll give you, you can customize exactly when these will show up. This here should be, or not London. If this is Eastern, this should be 8 a.m. I believe London opens at 3, Tokyo at 7 p.m. I definitely just messed these all up, but regardless, yeah, you can, because this is UTC, I'm thinking Eastern time. So you can customize these however you want, and this is what I was using for the longest time. And then I switched over to this one here, which I kind of go back and forth now between them. But that is besides the point. As I open up the charts this morning, I noticed that, yes, we had broken down under here. Our major range we were worried about, we had broken under it, 1700 here, kind of a psychological magnet level. Price was attracted to within here, boom, 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 redistributed into it, and then rolled under it, running all the lows that were left behind here, 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 and here, grabbing all of that liquidity and still continuing to run on those lows right now. So I opened up the chart this morning. I use top down to just kind of get a rough idea of where we're at in price, and then I kind of zoom into the time frames I'm focused on and where price is currently at within that. So on the daily chart, I was noticing, okay, we've had this breakdown here, given this big down candle here, breaking under this range, seeing this here as a redistribution to then break down, knowing that after a large distribution of, how long was this? Say 1, 2, 3, 4, 5, 6. Pretty much a whole trading week that we just ranged within here, and then giving us this breakdown. Now noticing that we have all that pent or built up volume ready to just drive us to the downside. So another kind of tool I sometimes use, there are a bunch of nuances that we'll go over in later videos on the technical side. Currently at technicals, the second section, I believe. We're about to end that one right now. And once we get past the basics of the technicals, we'll go into like a master class where I explain all these little nuances and things you can add or take out if you want. Ways, just like different systems, things you can add, take away to benefit yourself and what works for you. So we had this big down candle here. I was noticing that the close of this daily candle here was right here. Now, again, we don't look at candles necessarily in terms of the time frame that they're based on or anything except for the volume within those candles. Noticing here, this was all pretty low volume. And then we had a bunch of volume pick up. Sellers take over, drive this to the downside. And then I was just using this here as kind of a general rough mapping myself out kind of situation. So I threw this daily low close on here. Then I came in here to the 1 hour. Now we will go ahead and make this bigger. This sticks out. Drag it over a little bit. And then I noticed that this morning we had opened up New York session at 8 a.m. right here. Come on down to the 15-minute. Here's that daily close of the prior day. Now it's pretty often that once you're in this situation in price, if we trade above this daily close, price will often redistribute into it, which it did throughout here, and then continue to the downside, or obviously upside if that's what the ranges are printing. Now this here was a slightly smaller redistribution. Now keep in mind that ranges are fractal and price is fractal, and that there are going to be distributions within distributions and accumulations within accumulations, trends within inside of trends, etc. But that is what you are learning in the group. So it's exactly what happened here. This was a general redistribution here after this drive to the downside, after this full redistribution here, noticing the smaller distributions, accumulations, distributions, accumulations, distributions. I'd say it's more so that, distributions into those prior ranges. Now, this morning, remove all that. Woke up, throw in our session times again. And this is why I kind of use those session times in conjunction with those daily closes if price is right for me to do so. This morning it just so happened to be. I noticed that this here, we had this initial breakdown. Here was the high after this move up. We broke down under this low on the inside range here. Come on down to a 5-minute. This low, this inside range, boom, broke into the downside. After that happened, I was just looking for this pullback in to show me signs that, okay, this was an actual breakdown and not just a reaccumulation here to then take price to the top side, which it was a reaccumulation, but it was just a reaccumulation to send price into here to redistribute and move down. You can see how complicated this can get, but that's why I'm trying to explain it in kind of simple terms. I'm trying to hold a lot back from you guys to keep it simple while we build the foundation. And then later on, once you've built that foundation up yourself, we can start dropping the more complicated stuff. So I saw this here as a redistribution into Asia high and London high with our New York high here. Noticing that as price traded up, here was 8 a.m. this morning. Noticing that as price traded up, we put in this high here. I was noticing this here is potential supply. Thinking to myself, okay, if we run above New York high, it's likely we're going to get a continuation to the top side. But if it can reject here and give me proof that sellers are willing to take over, we could look to sell it. So and that's exactly what happened. We traded up above that daily close. We traded into Asia high, London high, distributed, broke under this low here, boom, gave us a smaller redistribution right here, broke under it, and then on that second break is where I took this short right here. With my stop, I could have put a tighter stop around here, but I've been using looser stops lately, just playing with a higher win rate because it helps with psychology, and psychology in the market is everything. I spent months and months this year actually on super low time frames, literally a 1-second chart and a 1-minute chart, 5-minute chart, predicting huge moves, but that would come at a cost of win rate because I would have to wait longer for the bigger moves to come, and it also took a toll on my psychology for a bit, but it did level me up in a sense because of how much opportunity there was. I was scalping like crazy earlier this year. If you scroll up in the group and the trade plans from me, you will see that I was on a super low time frame, just pumping out trade ideas left and right, showing everyone what I was taking. But this second breakdown here is where I took that short, and my target for that was actually based on the higher time frame area I was watching, which my one target here was this low. But considering we're in this downtrend, I know we broke out of this even larger range here and this range here, failing to give that deep retracement. I'm just expecting price to continue back to the downside. give us a large continuation kind of magnet down in the 1600 psychological level. But obviously, if price wants to change up on us, then I'll be able to partial out on the way and take profits as I see fit. But yeah, that's pretty simple breakdown on the trade I took this morning. I don't want to get too complicated with it and show you the all the nuances behind it, because that'll just complicate you. This is only the first video, and they'll just get more in depth over time.